Is the dragon about to breathe fire or take a dive? Today, we're taking a deep dive into the British pound versus the Japanese yen, or GBPJY, and the market is telling a fascinating story of conflict and opportunity. Let's break down the overall market picture. We're seeing a major tug-of-war between buyers and sellers, creating a tense and uncertain environment. There isn't a single clear direction. Instead, traders are clustered at key levels, waiting for the next big move. This indecision itself is valuable information. Let's look at the case for selling. A significant number of analyses are pointing to the area around 198.80 as a prime zone to enter a short position. The price has struggled to stay above this level, suggesting strong resistance. Some targets for these sell positions are set at 198.00, with further potential drops towards 197.30 and even 196.60. Another detailed analysis shows price reacting to a major supply zone near the 200 level, anticipating a rejection and a move down towards a support area around 197.40. We've even seen proof of successful short trades capitalizing on this bearish pressure, with one trader catching a profitable drop from 198.62 down to 198.02. However, the bulls are not giving up without a fight. On the buying side, there's a compelling argument that the price is ready to bounce. Several charts highlight a key support and demand zone between 197.50 and 198.00. This is where buyers are stepping in, seeing the dip as a discount and an opportunity to go long. One bullish setup identifies an entry point around 197.54, looking for a powerful move back up towards and even beyond the 200.0 psychological barrier. Others are looking at shorter time frames, identifying potential immediate buying opportunities right around 198.90, aiming for a quick push to the upside. So, what are the key takeaways for GBPJY right now? The pair is caught in a classic battle. We have a heavy resistance ceiling between roughly 198.80 and 200 level that is attracting a lot of sellers. Below the current price, we have a strong support floor between 197.40 and 198.0, where buyers are showing up in force. The direction of the next significant move will likely be determined by which of these levels breaks first. A decisive close above the 200 mark could signal a strong bullish continuation. Conversely, a firm break below the 197.40 support level could open the doors for a much deeper correction. For now, the market is in a state of equilibrium. The key is to watch these boundaries closely. Whether you're looking to buy the dip or sell the rally, the chart has laid out clear lines in the sand. Trade smart and stay disciplined.